Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Paris Rapeseed, Winnipeg Canola, and Malaysian palm oil.
Hello and welcome. Before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of the patterns, levels, analysis or any related items on these, my charts. This was all my own original work, as I think you deserve to have that. So with that, Paris Rapeseed. Since the low in mid-March, where we saw the fall ending with a hammer pattern, we've seen a V-bottom, followed overall by prices for the most part, very gradually moving high in what I initially thought might be a possible ascending triangle pattern, but which became an ascending wedge pattern. The lower trend line for both is the bright red mid-March to date uptrend, currently at 480.5. Initially, I chose not to draw a new trend line on a top side, but instead rely on two previously highlighted features. The first is the fairly flatlining gold long moving average, currently at 497.25. or the dark blue neckline extension, currently at 497.5, to the April to August 2024 head and shoulders top. Now, we've had attempts higher over both of these over most of mid-May, but we finally had a really concerted attempt higher 6 weeks ago. Though this initially looked good, a subsequent gapping changeover move lower put the market back down within the body of the ascending wedge pattern once again. Now the fall was slowed by the bright green, very shallow neckline extension, currently at 481 even, of the August-September 2024 head and shoulders top. A neckline that had acted as a resistance in April and a sort of support at the change from May into June, and interestingly yesterday and today as well. We also had support from the mauve medium moving average, currently 481.5, and I suppose in the past the green short medium moving average, currently 487.75. So this is now capping the market yesterday and today, plus support from the congestion area between a bright green neckline extension and the 50% Fibonacci line of the May 23 to January 25 move at 467.75. So overall, we are once again in the immediate future, supported by this congestion zone below and capped again by the gold long moving average above. Nevertheless, 3 weeks ago I decided to lay out some potential targets topside for this ascending wedge pattern. Though, as I said 2 weeks ago, and I quote, I freely admit I have doubts about them, and I would consider some immediate retirement should prices drop down below that congestion zone below, end of quote. Thus, a primary target X is up in the 521 even area, just above the congestion overhead between 514 even to 519.5. And that cap prices 5 weeks ago, plus the secondary harder to reach target X1 is up in the 537 area. This latter one looks very hard to achieve until you realize that we have limited overhead resistances past the congestion between 514 to 519.5 that capped the rise 4 weeks ago. Looking below that, well, it looks fairly quiet and empty right now, but first we have to get up there and to see if this is true, and that is something the market did not manage to do in recent weeks. Prices have instead started to test the downside, closing below the bright red lower trendline extension to the ascending wedge pattern for the first time 2 weeks ago, however temporarily it may have been. This prompted my thinking last week in that it was a bit early for downside targets, but bearing in mind the topside targets are already out there, a point which now seems very, very moot. So 2 weeks ago I risked laying out some targets below to balance the upside. Thus, a primary target X2 is down at 462, underneath the 50% Fibonacci line of the May 23 to January 25 move, at 467.25, but just above the late April low at 461 even. We also have a secondary, much harder to reach target X3 down at the 433.5 area. a target that seems very out of reach right now. Now, one final thing, and this may become relevant now. I've drawn a mid-March to mid-July bullish shift pitch hawk. So far, unhighlighted, it's just an observation I wanted to draw. And it is very, very tentative. We are nevertheless in between the lower time below, currently 476 even, and the middle time above, currently at 504. Just keep a wary eye on this one, as it may become interesting, or it may become retired. Or it may become morphed into a shallower bullish shift pitch hawk for the same move. Winnipeg Canola. Back in mid-May, we started to run into some serious overhead dynamic resistances. Specifically a resistance I mentioned 12 weeks ago, and I quote, some generated congestion roughly between 723.70 to 735.20, plus a recent ascending wedge lower trendline extension. Now, I also added, and that's the end of the quote, now I also added to this list 10 weeks ago, the neckline extension highlighted in bright red of the old August to October 2024 reverse head and shoulders continuation pattern, and that's currently at 760.80. This one had been particularly good at capping the market as recently as 5 weeks ago, and at the start of 4 weeks ago. The only reason I didn't mention this any earlier was I thought back then that the 723.70 to 735.20 congestion area overhead would have been enough. In the end, we had a gapping changeover lower 10 weeks ago, leading to what can best be described as a somewhat artificial weekly key reversal down. Prices have since tried to recover, but the initial rise in late May and early June was initially tempered on approach to the overhead 50% Fibonacci line and the July 23 to September 24 changeover gap. All this was achieved from the ammunition gathered in the earlier drop down as we entered into June, down to the previous mid-May low in the 664.10 zone, which is coincident with November 2024 and the interesting 30 high on that one, and the interesting 38.2% Fibonacci line at 665.70. And that's of the same July 23 to September 24 move that the 50% Fibonacci line above had cap prices on. Plus, we have the not insignificant rising green short medium moving average, currently at 701.90. So all these together halted a decline at the turn of May into June. Now, as I said 5 weeks ago, at the start of May, at the end of my commentary, and I quote, so what have we grown here as a pattern? Well, I'm not too sure, but if I was to hazard a very really outside idea, then I would look at the action recently as perhaps a bearish cat's ears pattern, or less outrageously maybe a double bottom. End of quote. Well, since then we have seen the formation of the easier double bottom pattern. This followed on higher to reach both the primary and secondary topside targets. But then 5 weeks ago the market became capped once again by the previously mentioned bright red neckline, dropping back down in a stepping motion down to below the green short medium moving average, as well as the 50% Fibonacci line at 730. Back to levels we saw in early June, just above a lesser Fibonacci support at 678.40 and a little above the mauve medium moving average, currently 674.5. We've since, in the past 1.5 to 2 weeks, recovered, but it still has left us with somewhat rudderless with a possible topping action, but no definitive pattern emerging as yet. We might still form some other patterns, such as a head and shoulders top, and I will watch out for that, but for now I don't see any major pattern as yet. For those who ask, no, I'm not comfortable drawing fresh bullish Andrews or shift pitch hooks just yet. At least as as it looks like an unstable ground right now, and that's the main reason I'm not happy to draw at these levels. Just watch out nearer wood, nearer term I should say rather than there, nearer term on the top side, and we have the dark blue October to November 2023 neckline, currently at 725.10. It might still have a bit of a bite. Bursa Malaysia crude palm oil. To start with, I'd look to the wide congestion area now overhead between 44.08 to 45.59. This was a bit far away, but it's getting closer. It was originally support, but is now resistance, and not only that, but longer term resistance. Next, there is the significant combination of the 38.2% Fibonacci line, the May 20 to March 23 move, and the 50% Fibonacci line of the May 23 to December 24 move. Both very close at 42.74. Being joined recently, I should say, and now separating away, is the declining mauve medium moving average, currently 41.53. This interestingly capped prices late 7 weeks ago and the start of last week, but gave way under bullish pressure late last week, and we can look at it as support now. We also have nearby the lesser Fibonacci line at 42.39, though this now doesn't seem to be that significant right now. This move higher all started with a drop down and subsequent build up from the testing and breaching of the interesting dark blue extension below, and that's currently at 12. That's currently around 38.72. And that's of the small late May to April 2024 reverse head and shoulders button. Now, I had said 12 weeks ago about this dark blue neckline, and I quote, "This is one to watch on the downside, as it is the core of a large April to September 2024 congestion zone stretching from roughly 3750 to 4100. This dark blue neckline extension becomes a key support, then a resistance, and now an important congestion point, all at the same time. Importantly, it caused prices to start moving higher, what turned out to be, as I said 6 weeks ago, and I quote, a possible, if imperfect, bright red ascending triangle pattern formed over May to date. It is a small pattern, and I could argue that the action over yesterday and the day before as an attempted false break on the downside that's so far failed. False breaks coming as they do so far along the triangle and so close to the tip are not unexpected, and whilst I cannot as yet give definitive targets for either side, I can give an idea of the potentials involved. Thus, a primary confirmed break higher over the bright red upper trend line will have a primary potential of plus 208 ringgits, with a secondary harder to reach potential of 298 ringgits. Plus a true confirmed break lower below the bright red lower trend line will have a primary potential of minus 131 ringgits with a secondary harder to reach potential of minus 298 ringgits, and that's the end of the full quote. Since then, prices stabilized over the bright red upper trend line, leading with the earlier numbers to a primary topside target in the 41.90 area and a secondary harder to achieve target X1 up in the 42.79 area. In many ways, these two target areas encapsulated the next area of congestion overhead. Now, 2 weeks ago, the market reached up and opened over the primary target when it moved up over the mauve medium moving average. Late last week, prices went further and reached up to the secondary target X1 at 42.79. All this action since mid-May, and especially including last Friday's action, has led to the construction of a mid-May to date bull channel, currently 41.18 to 43.82, that utilizes the bright red breached but repaired lower trend line and a new trend line, so far unhighlighted, an upper trend line currently at 43.82. What is interesting about this upper trend line is that it crosses over the flatlining gold long moving average in the middle of next week. I would thus be very wary around that time, as we might see a significant move or even just volatility at that time. There's one other feature which I would like to discuss, and this came about because I was at the end of June speaking about it in a presentation at the Biofuels International Conference and Expo in Brussels, Belgium. It was and is to watch out for a key level from now until the end of this year, and that level is $35.99. If we push down below $35.99 before the end of this year, then we would have set up the conditions here in palm oil to make that rarest of patterns an annual key reversal, with all the implications such a huge longer term pattern may bring. Please watch out for this, as it is important, and I'll bring you more details should we get down below there, even though I know we today are many hundreds of ringgits above it. Just bear in mind, we still have many months of this year to go.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.